Thank you for standing by. This is the conference operator. Welcome to the K92 First Quarter 2020 Financial Results Conference Call. As a reminder, all participants are in listen-only mode and the conference is being recorded. After the presentation, there will be an opportunity to ask questions. To join the question queue, you may press star, then 1 on your telephone keypad. Should you need assistance during the conference call, you may signal an operator by pressing star and 0. I would now like to turn the conference over to David Medlik, Vice President, Business Development and Investor Relations. Please go ahead.
Thank you, Operator, and thanks everyone for attending K92 Mining's First Quarter 2020 conference call. We hope you and your families are doing well. In addition to myself, we have on the line John Lewins, Chief Executive Officer and Director, and Justin Blanchette, Chief Financial Officer. I would also like to remind everyone that after the remarks from management, the call will be followed by a Q&A session. As we will be making forward-looking statements during the call, please refer to the cautionary notes and risk disclosure in our MD&A. Also, please bear in mind that all dollar amounts mentioned in the conference call are in United States dollars, unless otherwise noted. Now, I'll turn it over to John to provide you with an overview.
Okay, thanks, David. Well, first quarter obviously represents another important step forward with K92, delivering certainly in terms of our operational objectives and expanding our production capabilities and furthering our growth at K92 through exploration. If we look at safety first, no lost time injuries. And with one LTI basically since we started operations in 2017, we have maintained one of the best safety records in the Australasian region. And we obviously place a very, very strong focus on safety, and we're extremely proud of that record. K92 delivered a solid quarter. We achieved the second highest production on record with just under 20,000 ounces, 19,934 gold equivalent ounces. Really strong mine performance. You look at the metrics for things like material movements, underground development, material movement and development rates. We benefited from that expansion of our mining fleet, which is now larger, more modern, and in addition to that, completion of multiple infrastructure projects in 2019. So in terms of infrastructure, ventilation system upgrade, debottlenecking of the incline, which involves several hundred meters of bypass systems, establishment of additional production levels. So material movements, over 125,000 tons, which was a 110% increase on the first quarter of 2019. Development, 1,560 meters, which is a 215% increase on the first quarter and a 25% increase on the best we'd ever achieved before. Development rates, importantly, were consistent with our requirements for long-term operation. Strong operating performance from the mining side also resulted in the building of the stockpiles with minimal amounts at the end of 2019 increasing to almost 18,000 tons at the end of the first quarter, which represents approximately 1 month of mill feed. So provides us with considerable operational flexibility. On the mining side as well, an important operational milestone. First long hole stope mined using long hole stoping, which is with a modified Avoca system. And that was on the K1 vein, and it's performed well. Long hole stoping obviously will enhance the operation, throughput capabilities, and also allow us to improve things like grade as well with lower dilution. So head grade in the first quarter, 13.58 grams per ton, 0.36% copper. Gold grade, very much in line with budget. And also during the quarter, we had a positive reconciliation with grade and tonnage versus our resource model, which in fact we've had basically every quarter that we've been operating. So we produce more ounces than the model calls for. Grade was obviously lower than previous quarters, but importantly, as I mentioned, in line with our budget, and basically that reflects the fact that we're moving from 2019 being predominantly K1 vein to a mixture of K1 and K2 vein being mined. Of course, this is fundamental to building up the tons that we are treating. And certainly we expect that trend to continue as K92's next stage of growth is very much tonnage driven, which requires mining of both K1 and K2 veins, where, as I mentioned previously, vast majority of materials come from the K1 vein. And just also on that quarter, in terms of mill throughput, just under 50,000 tons. The mill throughput was by far the highest mill throughput that we've achieved in a quarter, and exceeds the capacity of the plant as originally built. So I'll now turn over the call to our Chief Financial Officer, Justin Blanchet, to discuss financial results for the quarter.
Thank you, John. Our Q1 2020 revenue increased by 15% to $27.6 million compared to $24 million in Q1 2019. The increase in revenue was primarily attributable to an increase in the realized selling gold price of $1,502 per ounce as compared to $1,247 per ounce in the prior year. When compared to December 31st, 2019, K92 had a net increase in unsold gold inventories of 746 ounces to 4,913 ounces due to delayed assay results during the COVID-19 state of emergency that was declared on March 20th. Those ounces were sold in April 2020. Our cost of sales was $15.2 million for the quarter, an increase of 63%, or $5.9 million compared to the first quarter 2019. This was due to a 105% increase in tonnage mined and a 76% increase in tonnage processed. The increase in cost of sales was in line with expectations when accounting for improved efficiencies and economies of scale. In comparison to the first quarter 2019, exploration and evaluation expenditures increased from $1.2 million to $1.8 million in the quarter, primarily due to drilling, assaying, trenching, surveying, and other related expenditures conducted. Cash flow from operating activities increased by 30% to $7,493,000. As of March 31st, we had in excess of $21 million in cash and cash equivalents, while still paying $2.1 million in principal loan payments to Trafigura, having a remaining balance as of March 31st of $11.2 million, and spending $3.2 million in expansion capital. As John mentioned, the K92 gold operations produced 19,240 ounces of gold, 339,993 pounds of copper, 6,937 ounces of silver, and we sold 18,747 ounces of gold, 306,993 pounds of copper, and 7,165 ounces of silver in Q1 2020. Our cash cost of $708 per ounce and all-in sustaining costs of $886 per ounce was significantly below our realized gold selling price of $1,502 per ounce for the quarter, which excludes the 4,913 ounces of gold concentrate inventory held at March 31st and sold in April. In comparison, 19,125 ounces of gold, 264,114 pounds of copper, and 5,564 ounces of silver were produced, and 18,406 ounces of gold, 257,620 pounds of copper, and 5,243 ounces of silver were sold in Q1 2019. Cash costs of $391 and all-in sustaining costs of $567 per ounce were obviously well below our realized gold selling price of $1,247 per ounce in Q1 2019. 2020 cash costs and all-in sustaining costs relative to the prior year increased relative to prior year due to a significant increase in tonnages mined and processed in 2020, as well as a greater focus on mining the K2 vein with gold grades in line with budget. We see downward pressure on costs via economies of scale once the Stage 2 mill expansion commissioning is completed and long hole stoping activities are expanded. I will now turn the call back to John to continue with the rest of the presentation.
Okay. Thanks, Justin. On the exploration front, we're extremely pleased with the drilling results reported during the quarter at Kora North. The results basically continue to demonstrate that tremendous resource growth potential. Drilling highlights included 8 meters at 32.6 grams per ton gold equivalent, and just over 30 meters at 23.6 grams per ton gold equivalent. So some extremely good grades and widths encountered from that drilling. And still, we saw that the system remains open at depth and open along strike to the south. That step-out drilling to the south will certainly be a major focus for the balance of 2020 and beyond. And basically, as our drill development advances from where we're sitting at present, and in fact to the edge of our mining lease and beyond, which will actually see us drilling from underground into our exploration lease at Kora South. On the regional exploration front, we're planning to drill Blue Lake, Karempa, Kora South, and Judd in the near term after the COVID-19 work restrictions are lifted. At this point in time, all of our surface exploration has been put on hold, but we do expect to restart some of that drilling as early as this quarter, probably first at Karempa and then Kora. Underground diamond drilling, it's very much business as usual. So we've got that underway with 3 rigs. We are continuing to expand our diamond drilling capability. And so we have a further underground rig due in this quarter, together with 2 surface rigs, which will also be focused primarily on expansion of Kora. In terms of COVID-19 pandemic environment and our operations, firstly, Papua New Guinea, we've got 8 confirmed cases in country, and there have been no confirmed cases amongst our employees. We've got quite extensive preventive and response plans in place, including testing capabilities. On April the 21st, we announced the creation of a 1.5 million Kina COVID assistance fund to support the central government and also the provincial governments of Morobe and Eastern Highlands, which are basically the 2 provinces where our leases are located. 1.5 million Kina is around about $450,000 US. We see that as a fundamental issue that we support the government and our communities in this during this pandemic, and that really we need to work together to prevail over this COVID-19 virus. In terms of our operations and the impact, as Justin noted earlier, March the 20th, PNG declared a national state of emergency. Mining sector has very much been deemed as an essential service, and we've continued to operate during the pandemic declared state of emergency. The initial state of emergency was for 2 weeks. That was then continued for a further 2 months. However, what we have seen is a progressive relaxing of restrictions, which has included going from basically a lockdown of domestic travel to domestic travel gradually opening up, which from our perspective has improved our operational efficiencies. I make the point that the initial lockdown had no impact in terms of material movements to and from site. It did have some impact on our ability to move in some of our national employees from outside of the province. However, we now have an ability to move all of our nationals in and out under an exemption, and more recently because we've also had a release of the restrictions under that state of emergency. In terms of our expatriate employees, state of emergency basically has no international arrivals coming into PNG without permission of the state of emergency controller. We have exemption from that, subject to meeting protocols. Those protocols primarily involve testing of our people when they arrive in country and a 2-week quarantine. And we are in the process of bringing in our first roster change of expats over this weekend and Monday. So to date, the expats that were in country when the state of emergency was declared have basically all remained on site. And at 2 weeks' time, they will be very happy to be having a break, coming out, and a new roster will be coming in. As a result of that COVID-19 pandemic, however, we are withdrawing our full year 2020 guidance, which is a result of that continuing uncertainty related to international travel or the commissioning of our second stage expansion. So while we can bring in our expat employees who have visas, work permits, etc., bringing in other parties at this point in time is still something that we're engaged with government on. And so the ability to bring those people in is obviously fundamental to our ability to commission the stage 2 expansion of the plant, which we put on hold following the declaration of the state of emergency. Once we've got more clarity on that, we'll be able to obviously provide an update in terms of guidance. The mine basically continues to operate at stage 1 plant throughput. And certainly what we're seeing in the plant right now, the guys are putting more tons per day through than the plant is supposed to be able to treat. So we're certainly seeing a good operational performance in that context. And we are looking at some modifications to mine sequencing to basically cater for the fact that we haven't done the expansion, and it obviously gives us some flexibility. Kora North, it's an exceptional deposit. We've opened up multiple production levels this year, so it's got a tremendous ability to adapt. And that does mean that one of the things we'll obviously look at is the ability to be able to treat higher grades if we're putting through lower tonnages. So that's one of the things that obviously we're focused on in terms of looking at our mine sequencing. Lastly, we're obviously extremely excited about the near-term growth catalyst for K92. Our highly anticipated resource update, well, it's highly anticipated by me, but hopefully everyone else. We expect to release very soon, and that'll be followed by the stage 3 expansion PEA. I note from the PEA perspective, all of the consultants involved in that had actually completed their site visits before the state of emergency was declared. So that is going ahead full speed as well. So with that, Operator, I think we'd like to commence the Q&A session.
Thank you. We will now begin the question and answer session. To join the question queue, you may press star, then 1 on your telephone keypad, and you will hear a tone acknowledging your request. If you're using a speakerphone, please pick up your handset before pressing any keys. To withdraw your question, please press star, then 2. We'll pause for a moment as callers join the queue. Thank you. Our first question comes from the line of Gordy Mark with Haywood Securities. Please proceed with your question.
Yeah, thank you very much for the time today. Maybe just some quick minutia questions. As you're migrating into, exploiting K1 and K2, and K1 moving into long-hole open stoping, can you give us an idea of the unit costs for mining that you can achieve on K1 and K2, and or did achieve, I guess, in Q1, and what you expect to go forward, and then also how you expect that to change going forward based on a new balance of cut and fill versus long hole open stoping for K1.
Okay, so the long hole open stoping will be implemented in both K1 and K2. We do expect to continue some cut and fill stoping as well, but more and more predominantly it will be long hole stoping. If we look at Q1, our costs were in the order of about $100 a ton for mining, and we would expect those to come down to around about $75 a ton as we get into a more balanced production regime. So right now, in that quarter, we just started that long hole stoping. There was a little bit of cut and fill stoping done as well. So a lot of our production, the majority of our production, was actually done from development, so development drives. So therefore, you'd see a higher cost. I suppose we've been still focused on opening up the operation, so we've still got a relatively high split between development and production underground.
Okay, great, thanks. And maybe just an extension to that. Can you give us an idea of the sort of flexibility you have around, I guess, active stope exploitation and development, to give you an idea of, stabilizing metal production, I guess, through the plant for this year? Just an idea of swapping between K1, K2, or different stopes to level out production.
Well, we've got 7 levels, and we've got up to almost 500 meters in strike length opened in the 1205 level. So we've got multiple levels currently which are producing. As you would see from the fact that we built up a substantial stockpile during the quarter, the underground production was running ahead of the plant capacity. Plant capacity basically 550 tons a day. Underground capacity was running, I think, closer to more like 650 during the quarter. And the intent for the year was that the mining side of things would ramp up until Q4, where we get to being able to do the 1,100 tons a day that we require for the expansion. The plant expansion was due to commission end of March. So basically the plant expansion is physically complete. It's about commissioning it right now. It's a little frustrating to be able to see the whole plant sitting there waiting just to be commissioned, but there you go, that's life. And so the intent had been that we would commission the plant expansion. The stockpile that we had built up from mining now running ahead of underground would have then been used up during second quarter into the third quarter, and then fourth quarter was when we'd actually get them into balance. So the underground has that flexibility because it's actually got more stopes opened up than we can currently treat through the plant. So you've got both K1 and K2 and up to 7 levels open. And to put that into context, last year we produced 2019 we produced from 3 levels. So we've got now 7 levels that we can produce from. So that's some idea, perhaps, the flexibility that we've now got with underground. And obviously, it's K1, K2. There are differences in the grades, et cetera. And so you do have some flexibility in terms of the grades that you potentially can mine, more importantly than the grades that you can actually put through the plant. So that's clearly one of the things that we're looking at, is to make sure that we're maximizing grades that go through the plant, and stockpile some of that lower, 10-gram dirt, the low-grade 10-gram dirt, and make sure we push the higher grade through. 10 gram per ton low grade, yeah.
Thanks. And maybe you can indulge one last question in terms of reminding what the sort of fixed cost base is through the plant, and I guess how that manages through, the eventual expansion on commissioning. Thanks.
Look, I think the plant costs would have been around $40 a ton. That'll come down to below $30 a ton as we get the expansion up and running. Fixed cost in the plant, in fact, fixed plant on the mine full stop are actually fairly high. We've basically got a full expat complement right now to do 400,000 tons per annum, although in the first quarter we effectively done the equivalent of 200,000 tons per annum. Likewise, with our employees, national employees, we're pretty much, not quite, but we're very close to the levels that we need to be able to produce at the 400,000 tons per annum. So fixed costs, if you look at certainly the plant side of things, the people kind of side of things, our people are pretty much a fixed cost now, and that we've got them all. And that then flows through to things like the camp, security, OC health and safety. Any of these overheads, if you like, are fixed costs. Power isn't a fixed cost as such, but it has a 60 to 70% component is actually fixed, and then the rest is variable. People often look at power costs somehow as a cost per ton. The reality is that the vent fans are running whether you take a single ton out from the mine or whether you take 1,100 tons for the day. The vent fans are one of your biggest consumers. Same with obviously pumping from the lower levels underground. Although our water comes out from the main area by gravity, you are pumping from the lower levels. Same with the mill. The mill does 550 tons a day, turning the mill over 500 kilowatts, pushing twice the tonnage through 700 kilowatts. So there's a component of fixed cost in that area as well.
Oh no, thank you very much for that detail. I'll hand on to the next question. Thank you.
Thanks for that.
Thank you. Our next question comes from the line of Chris Thompson with PI Financial. Please proceed with your question.
Hey, John, congratulations on a great quarter, and congratulations on hosting your first quarterly conference call. Couple of quick questions. I think Geordie's asked a lot of what I was going to ask there, but one question would be, what's the current tonnage and grade of your stockpiles?
Tonnage-wise, I think we're sitting at around 18,000 tons as of today. plus or minus. The grade would be sitting. Can't give you an exact answer on that. I think it's around 12 gram per ton. But I know that we've added some significantly higher grade than that to it recently. So I have to be a bit careful on that one. No, it'll be higher than that. I can't give you that right today because we've pulled some of them out and we've added tonnage to it. So
no worries. I mean, it's still a good grade. It's all I
Yeah.
Okay, perfect. And then obviously, ramping up to 1,100 ton a day at year end. Just remind us on the split of tons that you're going to be sourcing from K1 and K2. Has that changed, and what is that at the moment?
The split of tons is basically designed to be about a 1-to-1, K1 and K2. Right now, it is a little bit more, and I'm talking right now as opposed to the quarter, I think. It's a little bit more K1 than K2 because we've got the long hole stope obviously running on K1. But longer term, you're looking at a plus or minus a 1-to-1 split. And I think when you look at the resource tons, you see there's a little bit more resource tons in K2 than K1. Tends to be a little bit thicker. So I think if you looked at the overall life of mine, I think it works out to a little bit under 60% comes out of K2 and obviously the balance out of K1.
Okay, great. Thanks. And then I guess let's just talk a little bit about the country, obviously in light of discussions with the government and Barrick and Newcrest on their respective projects, and you guys contemplating a larger facility at K92. Maybe just sort of sketch out the track you would take as far as permitting that and getting the sort of social license and the government's acceptance of that.
Okay. So obviously our next step is release of the resource, PEA. We're continuing to drill. We've already drilled holes that are outside of the new resource update. So we know that we're going to be expanding the resource further during the balance of 2020 and into 2021. We're looking to complete a definitive feasibility study first quarter in 2021. And that then obviously giving us the next phase of expansion. It's our intent to take the PEA feasibility study and apply for a renewal of the mining lease at that point in time. We think we're looking at a project which I think we've had some discussion about in the past, but we're looking at something in the 250 to 300,000 ounces capital cost and 250-300 million, and a couple of years to bring that into production from go ahead of sort of mid 2021, second half 2021. It's our intent to, as part of applying for the necessary approvals to actually go into that expansion, would be to get a renewal of our mining license. Now, if I look at, for instance, Simberi, they are looking to go ahead with a sulfide plant. Basically, they're finished, or they're going to finish mining the oxide, and now they're looking to invest, I think, in excess of 100 million to put in a sulfide plant. Last year, they put in their application for a renewal of their mining license on the basis that we're going to make this significant change. It's an investment. We need investors need that security, and therefore we need a renewal of the mining license. And I think it took them 3 or 4 months to get the mining license renewal. So we anticipate going down the same process. one proviso I'd have on that is there is a new Mining Act which has been in process for years and years, and certainly we would hope that it would be in place by then, but with COVID-19 and all the other things, maybe it's not. If the new mining license, the new Mining Act has been passed, then we'd be applying under the new Mining Act, and that has some really positive things, such as an ability to expand your mining lease, and it's one of the things we look at would be actually expanding the mining lease as well as renewal. And the mining leases themselves can be longer term, so they can be up to 30 years, I think. So we'd be looking at a longer term mining lease as well.
Great, thanks, John. And then quickly, the final question. Obviously, the commissioning to get to phase 2 here on the plant, contingent on the third-party consultants being on site. Once obviously they can get on site, what's the sort of turnaround? What's the time frame you'll be looking at for that to get done?
Look, it would take us conservatively a month to get it ramped up to production. It's the major points of it really are the new recleaner flotation, and a new crusher, a new secondary crusher, and an upgrade of our process control system. So they're not enormous. Some of the things we've actually installed, for instance, a new classification system has already been installed and commissioned. So some of the things were actually installed and commissioned, but the main thing really is the flotation and the crusher. So we would see that as taking less than a month to have that commissioned and fully operating. And I can tell you, I mean, the plant itself right now is actually going really well. I think we've gone well in excess of 600 tons in a day through the plant. So we are getting more than 10% more through the plant than the nominal 200,550 tons a day that we have as the capacity. So we're actually we are pushing the plant on the basis that we've got more tons coming from underground than the plant has capacity for. Miners are really happy. For a change, they have been under the pump for the last 2 years, and they're now in a position where they're producing more tons than the plant can treat, and you know how miners love that to be the case.
Sure. Well, great, guys, and congratulations, specifically congratulations to you, John.
Thanks for that, Chris.
Once again, if you have a question, please press star, then 1. The next question is from the line of David Stewart with Desjardins Securities.
Hello, John and team, and thanks for hosting the call. So with the first long hole stope having been mined in the first quarter, and maybe by now you've mined another stope or two, I know it's a bit early, but what kind of performance are you seeing in terms of dilution and mining recovery? And if you've done that reconciliation work, I think in the 2019 PEA, it was assuming something like 35% dilution. So just wondering how you're doing compared to that.
Okay. Well, we don't have full reconciliation yet, so I can't give you specifics of reconciliation. What I can say is this, that the long hole stoping we've done to date, from a geotechnical perspective and looking at how it's coming out, we're not seeing unplanned dilution. We are very happy with how that first stope is coming out. And this is K1, remember, as opposed to K2. K1, the ground conditions generally are not as good as K2. So this was, a stope which you'd say has got more propensity to give you some issues potentially. And so far it's coming out very, very cleanly. and we're getting some extremely good grades out of it, I can tell you. So, sorry, I can't give you specifics right now, but we haven't got to the point where we've got those. All I can say is it does look very good. We're very happy with what we're seeing so far. And of course, it is that modified Avoca, so we are, mining and then backfilling as we go. So it is a modified Avoca that we're using on it on the long hole.
Okay, good to know. Yeah, and I've heard you mention a few times now the positive grade reconciliation. Are you looking at something like 5 or 10% reconciled to the block model grades, or what kind of numbers do you see there?
I think during the last whatever it is, when did we do the resource? The resource was done in October 2018. I think we've averaged over 10% more ounces than the model says we should get. And the question then is it tons or is it grade or is it a combination thereof? And it certainly appears, although we do get more tons, we would say that it's predominantly grade driven. With the cut and fill stoping, obviously, and high grade stopes, you have a tendency to make sure that you get all of your gold. So you're taking out, when you do that, the mining, you are taking out a bit of waste every time you do that cut. So you do make sure that you get a little bit extra out. So we would say, although yes, we have produced more tons as well as more ounces, we would say it was predominantly from grade rather than tonnage. And as I say, in excess of 10% and pretty consistent. In other words, quarter on quarter on quarter, not one area. Yes, you get a lot more in another area you don't. And likewise, whether it's been a quarter where you've had really high grades or a quarter where you've had just high grade as opposed to really high grade, you're seeing that positive reconciliation consistently there as well.
Okay, great. That's helpful. It's a good problem to have to try to figure out where those extra ounces are coming from. And yeah, that's all the questions for me. Thanks.
Okay, thank you.
Thank you. At this time, this concludes the question and answer session, and I would like to turn the conference back over to John Lewins, CEO and Director, for any closing remarks.
Okay, well, thank you for that. But experience for me doing a quarterly report out of a lockdown situation in, I was going to say sunny Perth, but of course it's actually 11:15 at night, so it's not really sunny Perth, but it was a very sunny day, 24 degrees. So quite something here. We would have to say, I guess, that we're extremely happy with where we are at this point in time when we look at what's happening around the world in terms of COVID-19 and the effect that that's had not only in our industry but in our societies and in our various industries, including in the mining industry. We're operating in Papua New Guinea. It's our northern neighbor here from Australia, and that brings you some challenges. What we've got is, first of all, a government which, when you look at our state of emergency, we had one case in the country and a state of emergency was declared, and a series of lockdown measures were put in place. We've now got 8 cases. None of those have been particularly serious. So we've got a government that's reacted very quickly to the pandemic in terms of the first case coming into the country. But at the same time, we've got a government which recognizes the importance of our industry. 85% of their exports of PNG come from the resource industry, from mining and from LNG. And so the government has been extremely supportive of the mines and looking to ensure that they continue operating during the pandemic. And so from that perspective, we have had a lot of support from government, and we've been able to maintain our operations obviously towards the end of that first quarter, with what we see as a very, very good first quarter, and continuing now into the second quarter. Yes, we have had to delay our expansion, but outside of that, operationally, it's going very well. Some of you online would have seen some of the new equipment that we've had arriving on site even during this lockdown. New trucks, new loaders, et cetera, et cetera. So we've got more gear coming in even during this sort of lockdown. We are, in my view, extremely fortunate to have what I think is one of the best groups of people working for us I've ever seen in 40 years in the industry. We had a state of emergency declared. We obviously gave all of our people from Australia, the expats, and also our nationals who came from other provinces, we gave them the option of going home. And this is a state of emergency. And they all, bar a couple of people, literally elected to stay. They wanted to stay and keep the operation going and keep the mine going and keep the company performing. And as a result, we've seen continuing operation. I can tell you that we have basically a full complement of expats on site right now. We're the only mine in PNG that's got that. Our people are that committed. We have a full complement going in over the weekend, Monday, going into country. Guys can't wait. We've actually got a couple of guys who are in country who are saying, well, I'm happy to stay on for another few weeks or month to make sure that everything is working on the mine. So we are extremely pleased with the quality of people that we've got, both expat and nationals. And they really, it's one thing to have a great resource in the ground, but it's equally important is to have that great resource that exploits your resource in the ground. And we are fortunate to have an extremely good resource in our people. In addition to that, we've continued with our exploration. We've continued with the expansion and of the resource. And very shortly, we'll be releasing the updated resource. We're really happy with where we've got to on that. And that'll go into a new PA, and we'll be looking at the next phase for K92 and for K92. And really, although this is a challenging time in terms of K92 and in terms of K92, it's also an incredibly exciting time. A lot of things happening, a lot of potential, and we'll start bringing more of that potential to the table and showing stakeholders, all of them, what the real potential of this mine is, which right now we believe we've just scratched the surface. So watch this space. Look forward to having another one of these sessions in 3 months. I do expect to have been back on site and all the rest of it by then, of course. Maybe I'll just hand over to David to see if you've got Any closing remarks from yourself, David?
Yeah, I mean, not too much from me to add. I mean, all I would just say is a big thank you to all the participants and everyone who joined online and on the phones, and we look forward to doing this again soon. Thank you very much.
Thanks, everyone.
This concludes
Have a
today's
good
conference
day.
call. You may now disconnect your lines. Thank you for participating and have a pleasant day.